If you're sitting there wondering how to get a car loan with Repo, you are at the right spot, my friend. So I want you to stick around because I'm going to actually explain to you all the tips you need to buy an auto after repossession. Welcome back, folks, to another edition of the Awesome Sweetie Kiwi Show. How are you today? I hope you are doing fantastic. I'm doing marvelous. If you were to ask me, if you are doing as splendid as I am, go grab a cup of coffee or tea or vodka and let's roll. In today's conversation, I want to explain to you how to get a car loan, not just a car, but a car loan with Repo. And having your car repossessed can be a stressful experience, right? Everybody knows that, especially if you need transportation to get to and from work or school. And the whole process could also cause you to worry that you will not be able to finance a car to replace the one that's been taken back. So securing a loan to buy a car is possible, even with the repossession on your credit report. However, you may have a hard time finding a lender, and if you do get approved, the financing can be expensive. So I'm going to show you the methodology you need to follow to get things done right. First, you need to understand how auto repossession works. When you finance a vehicle purchase with an auto loan, what happens here? The lender owns the car until you pay off the debt, right? At that point, the lender will send you the title and you will own the vehicle free and clear. Simple enough, right? And since the car is theirs while you make payments, the lender has the right to take possession of it if you stop making payments on your loan. So repossession laws vary from state to state, and lenders can set different rules on how long your account can be delinquent before it's determined to be in default. In many states, lenders are even allowed to seize the vehicle without notice as soon as you are in default. And state or local laws may also prohibit lenders from certain tactics, such as removing a car from a closed garage without your permission, using physical force, or making threats. So there are some restrictions here. So once your car is repossessed, a lender may sell it at auction to recoup its losses. If your car is auctioned for less than what you owe, you may still owe the difference to the lender. You'll also be on the hook for expenses related to the repossession. Here I'm talking about storage, sale preparation cost, attorney fees, and more. And so, can you buy a car after repo? Yes, it is possible. You can still secure a financing for a vehicle after a repo, but you'll have a hard time finding lenders. This is primarily because a repossession signals a default on your loan, which is something lenders are likely to consider when determining whether to extend credit. Your payment history is one of the most important factors in your creditworthiness, and as a result, many traditional banks and lenders may not work with you if you have previously defaulted, right? They're trying to cover their ass. They're trying to mitigate risks here. So if you do get approved either through a bank, credit union, or an online lender, you can expect the loan to have unfavorable terms, including a high interest rates. So to improve your chances of getting a car loan with Repo, please just listen to this conversation till the end. And I'm going to show you a few tricks and tips you can follow. And those are proven tricks and tips you can follow to improve your chances of loan approval. And before I actually get into the step-by-step, I also want to spend some time explaining what happens after an auto repossession. So if your car is repossessed, you will still be responsible for what you owe on the auto loan. It's likely that the car will be sold at auction, as I said before, and the selling price will go toward your balance, but you will have to cover the remaining amount. And one thing I want to say here is that you have to think about what really works for you here. If you're faced with repo, or the repo has already happened, you need to understand what caused the repo in the first place and trying to find a way to change things. First, you may want to stick to a strict budget and pay what you owe. And you may also want to consider bankruptcy as an option. Now, declaring bankruptcy, folks, should always be a last resort, but it may be your best solution if you still owe a lot of money after repo. If you are unable to pay the amount that you owe the lender, your account could be sent to collections. You may even face legal action and further damage to your credit. And yes, bankruptcy will do substantial harm to your credit rating, but you will at least get some protection and a fresh start to rebuild once you have been discharged. So after you have made it completely through the repossession process, you will probably be anxious to put the event behind you and get on with life in a replacement car, right? And until your credit is fully restored, you may have limited vehicle buying options. However, you may be able to get back on the road sooner than you think. So if you want to get an auto loan after repo, try to buy a cheap car with cash. You can also finance a vehicle with a bad credit auto loan. There are a lot of them. We have covered several of them on several shows. You can purchase a car from a buy here, pay here dealer, a BHPH. This may be your best bet if you need a car immediately after your repo. These dealers typically do not run credit checks and only require a valid driver's license, residency verification, and proof of income. And while many BHPH dealers do not report positive payment activity to the credit bureaus, some do. So if possible, try to work with a buy here, pay here dealership that will allow you to give your credit rating a boost by reporting all of your timely payments to Equifax, Experian, and TransUnion. And there are many ways to avoid repossession in the first place. Please, if you're falling behind, if you have issues going on, if you have things going on in your life and you can't seem to have everything under control, financially speaking, communicate with your lender. It's in both your and your lender's best interest to find a way to keep you current on your auto loan. And depending on the lender and your situation, this may include a modified payment plan or forbearance, which allows you to pause payments for a few months while you get back on your feet. Try to refinance your loan. Ask for help, or surrender the vehicle voluntarily. If you're getting close to defaulting on your loan and can't find a way to avoid doing so, you may choose to voluntarily surrender the vehicle to your lender. This can not only be a better experience emotionally, but could also be a way to save money on repossession-related expenses. Okay, this is very important. All right, now let's get into the actual step-by-step. Getting a car loan after repo. Here's a step-by-step. Step number 1, folks. You need to really know your credit situation. Poor credit means the likelihood of higher interest rate than someone with better credit, right? So fully understanding your credit position will give you a better idea of what to expect if approved for a loan. So you want to check your credit report with the major credit reporting agencies for things like errors. And if there are errors or inconsistencies, guess what? You want to dispute them ASAP. You can do so for free once a year, and you can get your free credit scores too for free. And you got to go to a website called annualcredit.com. And this is where you get all the info. And by law, you can get your credit score and credit history for free. Many credit card companies also make credit scores available without charge within their online customer account. So depending on how recently the repossession took place and the credit habits you've been keeping since, your score might be better than you think. So it's important to know what your score actually is. And how does repossession affect your credit score? Well, several ways. A repossession can stay on your credit report for up to 7 years from the original delinquency date. And since your payment history is the most influential factor in your FICO score, the missed payments leading up to your repossession will have a significant negative impact on your credit score. And here are 3 ways it can hurt you: late payments, default, and collections. Okay, so before the lender seizes your vehicle, it will report your initial late payments that can lead to a default and repossession. The default itself. A repossession is a sign that you didn't pay your debt as originally planned, and once the lender reports that you defaulted, it can hurt your score even more than the late payments. And then you have the collections. So in many cases, auto lenders don't send an auto loan to collections because they can seize the vehicle and sell it to collect the debt. However, if there is still a balance on your loan after the sale has been completed, the lender may send that portion of the debt to a collection agency if you can't pay it back. So you need to monitor your credit after a repossession. If your vehicle has been repossessed, your credit score will likely take a sizable hit. We all know that, right? But while those negative items will remain in your credit report, as I said, for several years, sometimes 7 years, their influence will diminish over time, especially if you develop and maintain a positive credit history going forward. So you want to monitor your credit. You want to monitor it I would say periodically, and make sure that whatever is in there is accurate. So step number one, really know your credit situation. Step number two, try building credit before you apply. So if you have time, and after a repo, try to actually build credit. And there are several ways to do this. And we have done research, and based on the Consumer Financial Protection Bureau, there are 5 steps, actually 4 steps, 4 or 5 steps you can take to build credit before you apply for a car loan or any type of loan for that matter. First, pay your loans on time again and again. Stay well within your credit limit. Only apply for credit you need, and make sure that you understand that a long credit history will help. So repay any money you have borrowed in a timely manner to stay current. You want to keep balances at no more than 30% of your total credit limits and pay them off each month. A balance that's close to being maxed out will be seen as a negative by a credit scoring model. So 30% is really what a lot of experts advise when it comes to your CUR, your credit utilization ratio. And you want to don't apply for a lot of credit in a short space of time, because this could lead lenders to believe your finances are taking another turn for the worse. And the more you can build up a track record of good habits, the more information there is to say that you are a decent credit risk. So when we talk about the getting a handle on bill payments, you have to understand that FICO credit scores are used by more than 90% of top lenders, and they are composed of 5 distinct factors: payment history, 35%, credit usage, 30%, the age of credit account, 15%, your credit mix, 10%, and new credit inquiries, 10%. So you want to aim for a 30% credit utilization or less. Limit your request for new credit or in hard inquiries, because new credit always will create hard pulls, hard inquiries on your credit report. Make the most of a thin credit file if you have it. Try to do your best to actually improve your credit through services like Ultra FICO or the Ultra FICO or the Experian Boost. Those are 2 programs that allow you to boost your credit score by adding into the mix other financial data that is not just credit related. For example, utilities payments or rents, that kind of stuff. And you want to keep old accounts open and deal with delinquencies. You can also consider consolidating your debts if this can help, and use credit monitoring to track your progress. Step number 3. So step number 1, really know your credit situation. Number 2, try building credit before applying for a car loan. Step number 3, apply with a co-borrower or co-signer. This could really help, folks. Either of these options will improve your position, especially if you need to apply for a car loan now. Applying with a credit-worthy co-borrower means applying for a joint auto loan, and if approved, each party has equal responsibility for repaying the loan and rights to the vehicle. Very important. So, do you need a co-signer or co-borrower on a car loan? It really depends. Let's first define what we mean by a co-signer or a co-borrower. Auto loan co-signer. A co-signer is someone who guarantees to meet any missed payments and even repay the full loan amount should you fail to do so, which provides a safety net for both you and the potential lender. What about co-borrower? Adding a co-borrower, also known as a co-applicant, to your application means you are applying for a joint auto loan. If approved, each borrower is responsible for repaying the loan and has the same rights to the use and ownership of the vehicle. And improving your chances of approval is a big advantage in itself, but if approved with a co-signer or co-applicant, you may also benefit from a lower APR, larger loan amount, or both. Co-applicants potentially have a greater effect on maximizing a loan amount because their combined incomes can reduce the debt to income ratio, the DTI. Okay, a co-signer or co-borrower might also be a big plus for your financial future. Think about it, because with such help, many consumers with no credit histories are able to get a foot on the credit ladder, while those with poor credit can rebuild their scores. That means next time they may be able to qualify for a loan on their own. Now, there are some requirements when it comes to auto loan co-signer and co-borrower. You got to ask, you can ask family member, such as a parent, spouse, or close friend, and credit worthiness is particularly important. So that the main barometer here is creditworthiness, but a range of other factors go into the mix when a lender makes a loan decision in these cases. Lenders will typically take a close look at the co-signer's proof of income and their ability to pay the debt if needed. Whether an auto loan co-signer or co-borrower is right for you will depend on your own situation, as well as how much risk the other party is prepared to take. So with couples, for example, it may make most sense to apply for a joint auto loan. And what are the co-signer rights? So the co-signer can take the car, because they are contractually, what am I saying here? So a co-signer cannot take the car. They cannot, even though they are contractually committed to the loan. But if the borrower defaults, the co-signer should be aware that if the borrower defaults on the loan, the lender can use the same collection methods against the co-signer as they would for the borrower, including asking for the full amount, garnishing wages, and legal action. And in the event of bankruptcy, if the borrower goes through bankruptcy and loses their car, the co-signer may still have to pay any outstanding debt after the sale of the vehicle. I'll be right back right after this. Don't go anywhere. Welcome back, folks, to another section of the Awesome Sweetie Kiwi Show. I'm still showing you today how to get a car loan with repo. Step number 1, really know your situation. Number 2, try building credit before you apply. Number 3, apply with a co-borrower or co-signer. Number 4, you want to save for a good down payment. This is very important because money down is particularly helpful when you need a car loan after repossession, and the more your budget allows, the more favorable your application may appear. And many experts recommend a down payment of 20% of the vehicle's price, while Edmunds recommends about 12% for the used vehicle. Okay, so and there are many reasons why you want to make a car down payment if possible. And we have actually the 5 top reasons that you need to think about when you making a car down payment, and why you should make one. First, you will pay less interest. Second, you may get approved for a loan more easily, especially if you have a repo on your credit history. Your monthly payments could be lower. You might qualify for special programs, and you can offset depreciation. Remember that vehicles typically lose around 15%, 20% of their value each year, but new cars have a faster rate of depreciation. They can lose 25% or more of their value in the first year. So if you don't make a substantial down payment, you could actually end up upside down on your loan. In other words, you owe more than your vehicle is worth as soon as you drive your car off the lot. So being upside down could make it difficult to sell or trade in your car down the road because you may not be able to get enough money to pay what you owe on your car loan. And if you can't make a down payment, there are other options. And you can purchase gap insurance. So this insurance helps you fill the gap between what your insurer would pay for your vehicle if it's totaled and what you owe on the car. You can get new car replacement coverage. So this type of insurance allows you to replace a new car that's totaled with a new one of the same make, model, and equipment. And the cool thing here is that if you decide against this coverage and only purchase collision or comprehensive insurance, your insurance company will likely only pay you the actual cash value of the car, what the car is worth at the time it was totaled. You can also try buying a less expensive vehicle, right? Getting a cheaper car means borrowing less, which could result in a lower monthly payment, and trying to get a co-signer to help you qualify for the loan. We already spoke about that. Step number 5, you want to be realistic about what you can afford. The thing here is that, what we've seen in our research is repossession is sometimes the result of the buyer purchasing a vehicle that was simply too expensive. Think about it, with a car payment beyond his or her means. So you want to take a look at your budget to work out how much car you can afford in terms of both total loan amount and monthly payments. And this is very important. And so how can you determine how much car you can afford? There are a lot of ways to do this, but I'm just going to simplify things here. First, you want to calculate the car payment you can afford. So you need to think about the amount of money that you can actually send the lender every month. A lot of experts recommend spending no more than 10% of your take-home pay on your monthly auto loan payments. Take-home pay, folks, not your salary, not your gross salary, your net salary. So step number one, you want to calculate the car payment you can afford. Step number two, you want to calculate the car loan amount you can afford. And the car loan amount is important because it not only will influence the car payments you can afford, but it also involves things like the origination fees, the loan origination fees, the APRs, the prepayment fees, if applicable to you. So think about that. You need to think about your loan term, how many months you have to pay off the loan, your credit score, which will in part determine your annual percentage rate, whether you buy new or used. So new car loans tend to have lower APRs. So think about that, right? And number three, you need to examine your buying patterns. Here, in addition to the formula for car affordability, recognizing your own car buying habits, good and bad, can offer clues to the best strategy for you. For example, are you someone who buys a car, pays it off, and then keeps it on for a few years? Buying a new car would work for you. You have a track record of shopping within your means, finishing up the loan, and going payment free for a while. That's smart. But do you get bored with a car after a few years? Then leasing is your best bet. What good is it to take out a 6-year loan if you're going to trade in the vehicle during the 4th or 5th year, really? You'll likely owe more than the car is worth and will have to roll that balance into the next loan. And this is not really a good strategy, So you would be better off leasing and paying less per month. Leasing also lets you get a nicer car for less money. You also need to calculate your automotive budget. You need to set a target purchase price and think about your fuel and insurance costs. Those are very important also. Step number 6, folks, you want to choose the right lender. So when we talk about getting a car loan with repo, you want to choose the right lender. There are some lenders that are very good. They actually specialize in lending money to people who have a repo on their credit reports. So you might actually find your luck reaching out to one of them. So we have done some research here, and we picked a few lenders for you. We looked at categories. We looked at criteria such as the range of auto loans offered, the ability to apply for pre-qualification so you can see estimated rates and terms, whether co-applicants are allowed, which could help applicants get better loan terms or rates, and other perks like rate discounts. So first we have Prestige Financial. This is good for people who have filed for bankruptcy. So you have interest rates reduction program, joint application allowed, and income requirements. You need to earn at least $2,250 if you are submitting an individual application, and $2,750 if you are applying with a co-applicant. It's pretty cool. And you also have auto pay. So auto pay is good for a range of refinance options. And this lender offers a wide range of auto loans, including loans for new and used cars purchased from a dealer, private party loans, and multiple refinancing options, including traditional cashback and lease buyout refinancing. And we love AutoPay because they have multiple offers. You have the ability to apply for pre-qualification. They have a wide range of loan amounts. They have additional products, and they allow co-applicants. And then you have New Roads. New Roads is great for interest rate discounts. If you're looking for a car loan with repo that has great discounts, think about New Roads. So they have a wide constellation of loan types. But remember that the company is only available in 30 states. So pay attention to that. There is no down payment required, and they will accept bankruptcy and repossession borrowers, and co-buyers are also allowed. And then we have Carvana. Carvana also is great if you're looking for a one-stop shopping experience. That's fantastic. The only thing is with Carvana, you only have one loan type. So you got to actually pick from their in-stock inventory of used cars. So if you want a different type of auto loan or don't want to be restricted to Carvana's inventory, you will need to work with a different lender. And with Carvana, one of the pros is that you have the ability to apply for pre-qualification. And in terms of eligibility, they want you to have a minimum income of $4,000 a year and no active bankruptcies. And they do not accept co-signers. And other car lenders who will lend to you even if you have a repo on your credit file include Capital One Auto Finance. and this is good for pre-qualification. Obviously, Capital One is an established lender here, and in terms of the loan types, they will finance new cars and used cars. Loan amounts will basically start from 4,000 and go all the way to 100,000. There are some dealership limitations though, because Capital One Auto Finance loans must be used at one of the company's 12,000 participating car dealerships. In terms of eligibility, you got to be 18 years old, live in the contiguous United States, and have a minimum monthly income of $1,500 or $1,800, depending on your credit, to apply for a loan with this lender. And you can shop online for the cars you want. We also have Credit Acceptance Corporation. This is actually great for people who are unemployed. So you have the loan types. They offer financing for new and used vehicles purchased at participating dealerships. And remember, Acceptance Corp is an indirect lender that offers financing through participating dealerships. And with these dealerships, which are located in all 50 states, there is no guarantee that they will be near your home. So you have to do some research here. And Credit Acceptance Corporation considers applications from people who have an open bankruptcy on their credit report. So this is pretty cool. And we also have My Auto Loan. And this is a great lender for shopping around. So what they do is they actually compare auto loan offers from multiple lenders, which helps ensure that you get the lowest rate possible, even if you have a repo on your credit report. So basically, My Auto Loan is an online marketplace that matches people looking for auto financing with lenders in its network that meets their needs. So they have a wide variety of loan types, both for used car and new cars. And My Auto Loan may consider people who have filed for bankruptcy as long as the bankruptcy has been discharged or dismissed. In terms of eligibility, it really depends, because here we have a loan marketplace, right? We have a lender marketplace. So the requirements are different, but in general, you need to be at least 18 years old. In Alabama, it's 19 years. You need to have a FICO score of at least 530 to 575 and a minimum income of 21,000 per year to qualify for a loan, and it's 18,000 for refinanced loans. Okay, so this is pretty cool. All right, folks, this is it for today's conversation. I was speaking to you about how to get a car loan with Repo. And first, you really need to know your credit situation. Number 2, try building credit before you apply. 3, apply with a co-borrower or co-signer. Number 4, save for a good down payment. Number 5, be realistic about what you can afford. And number 6, choose the right lender. Thank you so much for your attention. I will see you another time, but until then, remember, stay marvelous.